As the saying goes on Wall Street, a rising tide lifts all boats. There is a broad stock market rally, and many of the large sectors are hitting records, as well as some of the industry groups are also hitting all-time highs. Europe and Japan also reached all-time highs, which is showing that this market rally is not only broad, but it's also global. We will look at consumer discretionary and what does it mean when consumer discretionary are outperforming other stock sectors. We'll also look at gold miners as they break records, and this is despite a strengthening in dollar. So perhaps gold will also hit records, and maybe even silver do the same thing. And we will look at crude oil as it might be headed to the mid-30s. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, January 9th, 2025. As always, please remember to hit the like button, share this video, make a comment, and spread the word about this channel. If you are a subscriber, stay tuned. We'll be covering some of the ETFs, some of the large cap stocks, and some of the more speculative securities. This time we'll have new ones, Ringcental and Bio-Techne, Moderna, and some of the other stocks that have not been covered in the past. So stay tuned. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com. And I also am using my proprietary price action indicators, which you can see on this chart, this green, blue, red, and yellow lines, which are available for this interface known as TradingView.com. It's a free interface. If you get a free interface on TradingView.com, you just basically go to that site. You don't need to actually download anything. Come back to my site, Master Charts Trading, sign up, and I will open the door for you so you can see the same indicators on your chart. Let's look at S&P 500 first. I mentioned on several occasions before that this market is strong, and it also is a broad market. So in other words, even though S&P 500 is tilted towards large cap stocks, we also are seeing participation from a vast majority of tickers, or vast majority of stocks in the stock market in general, and S&P in particular, as well as in other sectors and other indices such as small caps and NASDAQ. So on this chart we're seeing fresh new records right there. I actually mentioned this last week, I believe, when I was talking about market breadth, and you could I pointed this out right here, that market breadth was actually tilted towards puts. In other words, people thought that the market will go down, whereas this indicator is actually the opposite. You have to look at it from a point of view of contrarian. So whenever this indicator is tilted up towards the puts, this is put divided by calls, so if puts are predominating, this indicator will be moving up. That is a contrarian indicator that you should be thinking about buying instead. And indeed, we saw a move above this green boundary line where I'm hovering just a few days ago, really, and I was like, yeah, this is already overextended into the put direction. So, and this was right there where I'm hovering on June 2nd, so last Friday exactly, and I'm like, this might just work out in our favor, and yes, indeed, now we're dropped into the neutral territory, but we're far away from being in favor of calls. We were in favor of calls, back here maybe, but during the bull market, being in favor of calls not a big deal, really. In any case, the gist of the matter is we're seeing record highs from S&P 500. Other stock sectors that are hitting records are high yield bonds. High yield bonds have a high degree of correlation to the S&P 500, so it's good that S&P 500 and junk debt are hitting records at the same time. We're also seeing new records from equal weight ETF. So this is pretty much as telling as it gets. So when an equal weight ETF, so in other words, Apple and Amazon are not as nearly as big, as an S&P 500 ETF SPY. Here they're just like normal stocks. All 500 stocks are treated equally. So notice that we just hit records. In other words, we're seeing broad participation from most stocks. Again, SPY record highs, Dow Jones just hit record highs, Nasdaq is approaching record highs, and we might get a pretty strong move on this one pretty soon if we break to new records. And very telling of the economy in general is small caps, IWM, also new fresh record highs for the small caps 2000 index. So this is telling us that very, very broad participation within the United States. In other words, many stocks are moving higher and very, very few are not. So the correct posture right now is to look for buying opportunity within the stock universe. Within the world universe, we're seeing record highs from other markets as well. Here is Japan 225, also at all-time highs, and Europe, Euro 50 at all-time highs. So this is showing us once again that not only this rally is broad domestically in the United States where I reside, but it is also a global stock rally. And the reasons for this is, anybody's guess. Here in, at technical trading, we don't really worry about too much, about the why, but the fact of the matter is the why is pretty straightforward. We're seeing a breakout above this blue support resistance line where I'm hovering on the 2nd of April this year, 25th of April this year. This was for European stocks, and this is the beginning of a bull market, so we were looking for opportunities to buy, as in, for example, there was an opportunity to buy here in August of last year, but the rest of the opportunities were not great. So pretty much the same thing. We're working from the same assumptions, that the correlations are high throughout the world and throughout the United States stock market universe. Stocks correlate strongly to other stocks. This is less true for gold-related stocks, and this is the only major industry group that I found to have a significantly different correlation to the S&P 500. But the rest of the market, many exchange-traded funds, many sectors correlate strongly to the S&P 500. So we are, we're looking at S&P 500 as the guide, but the rest of the market will follow most likely. That's why I said rising tide lifts all boats. We're seeing a broad market rally. Now I wanted to touch briefly upon XLY, also known as consumer discretionary sector. Within this consumer discretionary sector, this is a very top-heavy sector, as all of the State Street SPDRs, they are top-heavy. In other words, top 2, 3, maybe 4 stocks are dominating the architecture of this ETF. So we have literally 40% of this ETF taken up by Amazon and Tesla, and then the rest is, things like Home Depot, McDonald's, Lowe's, Starbucks, Nike, Chipotle, things of that nature. So it's like discretionary. If people have money, they will buy Starbucks. If people don't have money, they will not buy Starbucks, or they will not buy something that they don't really need, but they kind of want to have. So this is a very telling story. When this type of stock ETF hits an all-time high, that means the economy is doing just fine. And all of this talk on TV, you can say all kinds of things like, the economy is doing this, but we're worried about that. Yes, but if we just look at one indicator, and this is it right here, consumer discretionary, is it making in this case, it's actually leading the stock market higher. So we're seeing domination of spending, or rather domination of consumer discretionary spending within the economy. This is just telling you exactly what you need to hear. The economy is doing just fine. Sometime in the future this may change, but I don't see it happening just yet. Okay, let's switch gears. We're currently looking excuse me, at USD JPY. This is Japanese yen. So let's first look at USD JPY on a longer time frame. We are approaching records. USD versus JPY. So in other words, the Japanese yen is sinking to lower and lower levels. So very close to all-time highs for US dollar versus Japanese yen. So does it mean, what does that mean? That means US dollar is winning this battle, okay? And I'll get to the point why we even care about USD winning the battle. So approaching records for USD versus JPY. Euro versus US dollar also is very close to multi-year highs, but in this case we're actually in favor of euro. However, the past few weeks, like 2 weeks here, notice this action here. Let me see how many weeks that was. Yeah, 2 weeks. So you notice this action, we've basically been selling non-stop. I thought we were going to continue lower back here in November, but we made a marginally higher high, and now we're pulling back. So we're at this green support resistance line, and if it doesn't stop here, we could easily continue lower, again in favor of in favor of US dollar, because this currency pair has the opposite. It has euro on top, US dollar on the bottom. So if US dollar getting bigger, it will pull this currency pair lower. Why do we care? Because we look at dollar currency index. Here's DXY, and there's that run up that I showed for the euro, and to the lesser degree for the USD JPY, also been running up. Dollar currency index is like 50% euro and about another 10 to 15% Japanese yen. So about 50% is now moving in favor of US dollar. Additionally, if we project my indicators into the future, we can kind of see that the indicators are kind of curving down towards the price action. We are interested in this blue support resistance line, which actually gets lower and lower, closer and closer to the price action. So currently this currency index DXY was below the yellow line and was below the red line. It means it was in a downtrend. You can see it back here. This was the entry into a downtrend, and we could sell it short should we so desire. Right now we're moving the opposite direction. We're rebounding. What I'm trying to tell you is, if we do almost like very small move up and just slightly move higher, we don't need to move higher like drastically. So what I'm trying to explain is this. So if we were to drastically move higher right now and get to the blue line, we would need about a 5.5 point move to get to the bullish levels. However, just a few weeks from now, in February, end of February, we will only need to move 2.4 points from today's price towards this new bull market values, new bull market levels. So this is what I'm trying to explain. The reason why I get excited about this is because the indicators are curving down towards the price, and price is coming down towards the indicators. So now we see a stronger and stronger possibility of a turnaround for the dollar. So the dollar will no longer be in a downtrend as it is currently, but actually will be in an uptrend. And we want to see a dollar in an uptrend, or I'm not saying we want to see a dollar in an uptrend, we just need to be aware of the fact that it could be in an uptrend, and the reason why we worry is because we trade gold and gold miners, and some people trade silver. So here are the gold miners. They've been hitting records. In fact, they hit records today, which is unusual in the scenario of strengthening dollar currency index. So gold miners have been hitting records. If you traded gold miners, for example, the last opportunity to buy was back here in May of last year, and you gained probably over 100%. Yeah, it's about 100% move. And you would still be open, like your position would still be open. I would probably not close it yet. Looking at recent price action for gold versus US dollar, so we made all-time highs, and we're again approaching all-time highs for gold versus US dollar despite strengthening in US dollar. And the same goes for silver versus US dollar, XAG divided by USD. We are again also approaching all-time highs. So despite strengthening in dollar, we're seeing gold and silver behave quite well. So what does that mean? It means that time is strange right now, and the correlations between dollar and gold and silver are not negative. Usually they're negative. When gold goes up, dollar goes down. Vice versa, dollar goes up, gold and silver go down. Right now they're not that straightforward, and as you probably have heard unending news stories about unprecedented this or unprecedented that. This could be one of those unprecedented events, although this has happened in the past to a degree. So we will again be watching the dollar, we'll be watching silver and gold miners to see which way things will break. Finally, I wanted to wrap up with oil. So last week I mentioned that oil could collapse if it breaks these lows from April, and then the latest one from December. So I'm going to zoom in on that. So this lows here, we kind of came down almost to that low just this week. We didn't break them. I mean, we need like a convincing close below this December 15th low, or the December 16th low right here. If we break that low, I think we could easily collapse towards like 40s. Again, why am I getting that number? I already explained this in the past. Is just this. Let me show it to you. Just this pattern that I just highlighted, from the low in April of last year, 25, to the high in June of 25, to the current lows. If we break below those lows, then we could easily see a duplication of this pattern to the downside. So that's $25, basically $24.50. And if we see a break below that, we're looking at low 30s, possibly even upper 20s. So that's the projection. I think this is a more reasonable low from October 2020, around $35. So I was saying probably around $35 if we break convincingly, we break this lows from recent weeks. All right, that's it for this week's recap. Let me know what you guys think. Make a comment. Put a smiley face in the comments, hit the like button, share this video. It makes a big difference for me, and I feel like I want to continue working on this channel. So when you are ready, head over to MasterChartsTrading.com, click on sign up. So again, I have 3 plans: trading indicators, newsletters, and both trading indicators and newsletters. So once again, these indicators, they're available for TradingView.com interface. TradingView.com is free. Sign up on TradingView.com, come back to MasterChartsTrading.com, sign up for the indicators. I will open the door for you on TradingView.com. Newsletters, I send out daily alerts about various securities we trade. For example, this week we've been talking about these various securities, large cap stocks, ETFs, as well as speculative securities, and some like psychedelic drugs, like psychedelic ETF, as well as Cybin, also a psychedelic company. And of course, the best deal is to get both trading indicators and newsletters. I have both yearly subscriptions and monthly subscriptions. Monthly subscriptions are more expensive. Yearly subscriptions save you 2 months free, all of them. All the plans come with free 7-day trials, so you have time to cancel and try it out and cancel if you don't like. But many people do not cancel and continue with me for many years. By the way, thank you very much to the subscribers who have been with me. And you could be also. So sign up. Let me know if you have any questions. Thank you for watching. Have another great trading week. Bye-bye.